No. Yeah.
What the hell?
What?
My hair just fucking curled up, bro. Yeah, I thought that's what you did. No, I only had the bottom, bruh. This is my curls, bruh. I'm tired of her.
But it's nice though.
Yeah, but it's nice though. I'm tired of y'all. You just say you met me. I'm tired of y'all. Like what?
Is you like that?
I'm not accepting of hair. It's just too much to take. It's not that I don't like it. I would like it if it was taken care of. It's not taken care of at the moment. So I cannot say that I like it. I know my potential. I know my potential. And it's just not. And it's also because like it's meant to be straight right.
Hmm? Yeah. Wait. Right now. Bad, y'all. Came a little late. Had to catch this little train in Japan. That shit took forever. But I just make it home. I make it home now. Mhm. All right, so a nice breakout. Just trying to retest right now, but good chance that if we do fall down, we got a lot of zero buys in these areas. So I don't see us really trying to go down until we get to these zeroed out orders and the 50%, which is on the 4 hour. So we've been tackling all of this, bro. We've been since last week, been in buys, trying all these, right? The one, two, threes, caught some pretty fire plays going up, caught some yesterday going up, caught some this morning going up. Because you can't swing in futures trading, we just got to be involved every time we can get in and out on each day. So been trying to call out the plays as much as possible to get us there. We're basically headed to those orders as we speak. Um, so when we get there, though, that's where it's going to get a little interesting because these are zeroed out orders up here. So any one of them could potentially cause us to turn the other way. But oftentimes we see the retracement go to the 50 and then it hangs out there for a while. So I guess we'll see. But for right now, when we talk about market corrections, right? One thing that I wrote in the perfect retracement book is when the retracement happens, it can put us in competition for a correction. And a market correction is when the trend is going, you can see here, let's check it out. So the trend itself is upwards, right? It's an upwards trend. But when it falls, when it goes too far out from the top, usually it has a pretty deep dive, but nonetheless, it's still just a lower high. And in order to correct that, it needs to get back above the 50, hang out above the 50, and then it can make a new high. That would be considered a correction. If we fail the 50, it would be a rejection and it would fall out of the trend, hence making a downtrend at that point. And then that will start reversals and cause us to start heading down more than the upside, right? So based off of the data we get from this right now, within the next 3 days or so, I'm sure we'll hang out here or maybe recover a little bit more into this area. We'll know more or less if we're going to be in a downtrending market moving forward into the next quarter, or can we actually reach a new high once again and continue just beating up the same strategy that we've been using this whole time? So downtrending market, the only thing we have to switch up is what we talked about on Monday, which is, you see the 1, 2, 3, take it to the 50, and then just swap over to the sells and take it to the low. And those would be the bangers that we'll look for. But if we're going back into a bull market, then the 1, 2, 3 is down here, get a good entry, take it above the 50, and then you can expect it to make a new high eventually. So that's the only difference. And like we broke it down in the models course, the phases, right? You got your first phase, which is a drop. Second phase is where you usually find your 1, 2, 3 or some kind of order block to target. You get your entries. And then that third phase is where you decide, is there going to be a correction, which makes a new high, or a rejection, which makes a new low? So right now we're kind of pushing towards the end of that second phase once we get to the 50%. Yeah, that being said, it's just we got to collect the data, unfortunately. So the market's got to do what it's got to do until it gets there. But I do expect us to at least get to those zeroed out orders because it would make no sense to turn around prior to that, unless they wanted to use maybe some liquidity that was created here and make a bigger jump later, right? So for example, imagine we miss the 50, then that means we're just going to come right back down to the 23. And if that happens, where are the zeroed out orders in that area? So if we look at it like this, check it out. The zeroed out orders are all right here. And that's also, ironically, where the 23 level is. So if we fail the 50, we still can come back down, hit the zeroed out orders, which is also the 23, which would just count as a retest. And that would make it a lot easier for them to blast through the 50 and make a correction. So even if it fails, that's still okay. We'll have to reassess ourselves when we do get down to this area, or we can target this area. There's no zeroed out orders until this box. So if it does fall, then we'll switch over to sells and start targeting the 23% of this huge drop that we got on the 4 hour. So if I zoom out for you guys, you should be able to see this here. Top, bottom, right? 1, 2, 3 idea. We've already broken through the 23, and then we are approaching the 50 now. So fail the 50, retest 23, take it to the high, or hang out at the 50. Eventually, we'll be able to see the box idea, see if it goes out top of the box or the bottom of the box, and we can target it that way. Yeah, so for now, it's more than likely going to look like this, right? We'll get the mind sweeping inching game. So it'll probably try to use a lot of this area until it finally does get there. So I would say just take profits as you see it. Don't try to hold plays too long because we're already in the final stretches of this thing. So there's no reason for you to be looking for, 30K trades when we're right here. So don't get too fixated on where we are and instead use the technicals to manage your risk because there's going to be a bigger trade later when we get here. So if you miss the whole journey getting to this point, then that's okay. Just take accountability for missing it and just be ready for the next one. Yeah, so for now, we don't really have any order blocks or anything in the way. So it's just got to stretch to this zero area. So that's the idea I'm going to subscribe to right now. So everything that's we're looking at visually, especially during market hours, is more than likely manipulation tactics in order to keep getting you out of the trade. So best thing I can do right now, I would say, is just turn on that EMA and just let it grind the EMA. And if you get any candles to close under it, then cool, time to get out, especially with the entry that we got. And if you're not in the trade, then maybe using the EMA could help, but sometimes it does do a pretty deep dig. So just be careful with that. But yeah, we're targeting 17,795 for a shave off. So I'll take half my position there, and then sometimes when we get to zeroed out orders, they like to blast through them really quick. So it could extend itself and reach for the rest of the 5 up here, get all those zeroed out orders, and then give us some kind of reaction. So see what's good. But for now, You know how trading works. Candles have to move, close, and operate. So in a normal world, we usually would just set an alert for these areas and then, react to it based off the alert. But for right now, since we just have the visuals up, we'll let this trade operate, maybe repurpose it for content. Um, but in the meantime, while this thing is operating, do you guys have any questions that we can get to today, or pretty schooled up for right now?
Question.
All
So
right.
I know in the modules you explain the gap for after hours for like a different market, but you don't really explain on NQ on how to get that data.
I see. Yeah. That's because there is no way to get that data on a gap on futures because it's a 24 6 market. So that gap that exists on futures is just because the market was closed for whatever an hour, I believe. I think it's 23/6. So it's closed for 1 hour a day, and it's closed on Sundays. So if there is a gap, which you might be talking about,
Yeah, I was like referring to like the weekend gap. So like when Sunday rolls around, you can have some data to kind of look at to see what was going on over the weekend.
I got you. Yeah, there's no way to get that data, unfortunately, but how you should treat it is quite similar to the way that I explained for other stocks. Although with the other stocks, you can go to like NQ or ES and actually like find data. There is no data, but I like to treat the gap kind of like an order block. So that space that doesn't really have any candles, I'll use it kind of like order block. So if it pushes in there, no one knows what's in there. Therefore, there's probably a bunch of orders that are skipped. So if the market's going down into it, it's probably really bullish, you know? Um, yeah, but that being said, like there's no way to get that data, unfortunately. But you don't have to trade that day as well. If there's not enough information for you, I recommend skipping it.
Yeah, I've been just skipping Sundays, like as soon as the market opens and stuff. But I didn't know if there was, if I was maybe missing something.
Nah, nah, you're not missing none, bro. I would just use the regular tactics, you don't have much data to use, so just use what's given in order to develop a trade. So if it looks confusing or you don't have enough data, then there probably isn't a trade to be had in the first place. So you just got to leave it until there's something. We just
Yes,
got,
sir. Thank you.
yeah, no worries. We just got taken out for 5 contracts at that price target. So I'm not sure if you guys took that trade, but that's my shave opportunity. So that's half out right now, but we still haven't touched zeroed out orders. So technically, there's no reason to just blast off in the other direction. But we're very close to that area. Oh, sorry. We're very close to that area. So let's look back at that 4 hour chart real quick. I don't know if we like tapped it. My box is messed up or anything, but pretty sure we didn't go in there yet. Yeah, we just kind of like tapped the bottom of it. So oftentimes they can make like equal levels. I don't know if we talked about that before, but equal highs usually get created. And then there's like consolidation under it. And then eventually it grabs liquidity and then it can break those equal highs a little easier. So that's also a play in their book. That's why I shaved half. But for now, again, use the EMA as a guideline. If it gets a strong push under the EMA and doesn't come back up, then it'd be easier to just get out of that position and take what's given. But for now, just let it ride. You guys got any more questions?
I got a question, bro. Can I
What
see
up?
you use the anchored volume profile like in real time so I can see you run down like the different time frames as well as like I guess just like structuring it so where you're gonna enter
Mm,
your position until you're getting to your position.
yeah, sure. I'm actually making a PowerPoint right now. I just haven't put pictures in it yet. Let's see. I might have talked about it. It's only one slide. All right, we'll just talk about it. So in real time, volume anchor profile is something that I don't keep on my chart. It's just kind of like how do I describe it? back in the day when they used to use, dang, we old, bro. When they used to use overhead type shit where they would have like the paper and then put the little overhead on the light and then it like projects it on the white.
Yeah, yeah.
Yeah, like that.
Really.
Yeah, so I use it kind of like in that concept. So like if I wanted to change the way I'm looking at it, I would need to switch the paper. So um what I mean by that is let me erase everything we know what we're doing here. So for example, this market's about to fall, right? Quote unquote, comes back down. If it comes
Mm.
back down, where does it need to go? What's in the way, right? So what's in the way maybe is a structure level, but there's more than that, right? There's maybe an order block. So I want to know where are these orders at. So I take this, right, kind of like an overhead, and I use it like a magnifying glass to see like, okay, what's inside of this candle here. So I'll click it, and then it should show me everything that has to do with like this area, right? This box. It automates that
Mm.
box. And now a bunch of orders come up. Now there's like hella zeros here. Well, what zeros have an order block, right? I like this one. This has an order block. So is there zeros in there? Yes, there is. Uh, Maybe this turns into an order block. It's not done yet. Don't trust information until it's done. This candle is currently operating. So therefore, if
Right.
I were to draw this box in real time, I don't know how far that candle is going to drop in here. So if I put the box right here, because that's the wick that I have to use right now, candle is still operating. So it can change these orders in real time at any moment. See how these orders are now changing? This used to be zero.
Yeah.
Yeah, so you can't use it in real time. It needs to be data that's already cemented to know where those zeroed out orders are because the algorithm, it's attracted to these zeroed out orders kind of like moth to light, you know? Uh, so that being said, it's cleaning up a lot of these zeros as we speak. So let's see. Mm, Real time. So right now I'm on the 15 minute and I'm showing you this. It's because that's where I have the data. I have let's say zeroed out orders here. Um I have order blocks that I'm actually watching. If I change over to let's say 30-minute, there's no order blocks for me to be looking at right now. So therefore I can't really use zeroed out orders because there's nothing for me to target. So if I go back to the 30-minute, I can find an order block maybe like this one here. And then I can look at that, grab it, click on it. Okay, bunch of zeroed out orders in these areas. So this is where I'd be able to say, cool, if this market falls right now, which it currently is, let's not let it take all of our profits away. If it falls right now, then it would be targeting zeroed out orders. So that's this order block. And where's the first zeroed out orders? Right here. It doesn't usually stop at the first set, but sometimes it does. But I like to have an order block showing me where those orders are. But look, there's also orders under the order block. So you know how sometimes, for example, I think there's one right here. So here's an order block that we targeted earlier. And it pushed through all of that in the order block. And then it went back up. That's because there's still zeroed out orders under the order block. So you know this is the lowest that it would go for some zeroed out orders. So even though the order block is there, all of this area is zeroed out. So you can see it go down, probably wick into all of it, come back up, and then close. But that means all the zeroed out orders are now gone. So the market shouldn't be attracted to going this way anymore and should now do the reaction of filling all of those orders. What happens when it touches zeroed out orders? It executes the order. And if it's
Mm.
coming down into an upside order block, then these are all buy orders. So it's going to execute the buys, which causes this little slingshot action here. It gets all the orders and then it takes it back up. You know,
Right.
that being said, when you switch time frames, there's different order blocks. So that means you need to use the anchor on those order blocks to see where are the zero orders respectively, right? So this is one that we were looking at. And you can see this is the order block entirely. If we extend it across, here's the zeroed out orders, right? Inside of that order block. So that's why we're targeting it on the 4-hour time frame. But again, let's also talk about this here. Oh shit. Oh. this order block down here was the 30-minute order block. So let's check it out on the 4-hour. 4-hour doesn't have zeroed out orders there. It's only way down here. So all of this is zeroed out orders, but the only part of the order block is like right down here, right? Wick to wick. So
Right.
all of this is an order block, but only this is zeroed out orders, this area. So if we take off the volume profile now, we know this is 30 minutes. If it gets past these 30 minutes, then maybe a higher time frame is running it. Where's the next zeros on a higher time frame? It'll be this one. So that's how you know the magnet is, being attracted towards a particular level or area because it's trying to fix itself algorithmically.
Okay. That makes sense.
Does that shed some light on the idea, or
Yeah, it kind of clarifies like how to use it. Like it's not really just kind of like you're throwing it on there and you're kind of just looking, you're really strategizing where to put it.
Yeah, exactly. And that's why it's very hard to just throw it at a new trader, because I could have taught the course that way, but you wouldn't know where to look. So if you just try to rely on orders, you're going to get clapped because orders are skewed. There's real orders and then there's market orders, or sorry, conditional orders. So a market order is a order that is actually filled, like it's making the market move as we speak. A
Right.
conditional order is like this.
Placed. Yeah.
Yeah. So now it's like I put this order here, so the system's gonna recognize that there's an order there, but like I can delete it at any given point. So who's to say that you put your anchor profile up right now, you see it, it's got zeroed out orders there, and then when you take it off, and then I delete it, you don't have new data. You have data from when I used to have the order in, not before. So
Got
it gets manipulated a lot, so you can't use it just by itself.
Right. For sure. Yeah, that definitely clarifies things and clears things up and as far as actually using it.
Oh, hell yeah. Well, yeah, bro. There's
Appreciate it.
definitely a lot of little tricks to use, but as long as you know how to trade, like, normal shit, like, order blocks, stuff like that, this should just
Yeah.
be like, it should just be like the ketchup to it, just the extra sauce. Like,
Adding a little extra to it.
yeah, it's just extra, but it's not necessary. You can still eat it, feel me?
Yeah. But appreciate
Uh,
it, bro.
yeah, no worries, bro. All right. So we took out our position, so we didn't lose too much, but it just dug for zeroed out orders, right? So you can see a little order block here. And if we go back now that it's touched the area, the zeroed out order should no longer be there. Right. Now it basically messed up the data. So it grabbed the zeroed out orders, head right back above the EMA. Remember, we said use the EMA. If it has a strong push and close under it, then we should probably get out, which it ended up doing. So at least we can save ourselves in that manner. But for right now, we don't know if this market falls because it's in between a lot. So we just discovered on the 30-minute time frame that we have zeroed out orders right here. And then we also have the 4-hour time frame, zeroed out orders up here. Maybe there's some on a 30-minute. I didn't really look. So let's go check that out. Nah, there's no order blocks. So there's no order blocks over here on the 30. So there's no zeroed out orders except for maybe these. But that also maps out with the 4-hour. This is the start. Yep, so you can see zeroed out orders right here in the 30-minute. So it's like overlapping the 4 and the 30. So I think we're still gonna make our way up there. We just keep getting pushed down. Usually we get this kind of action when it's like a minefield, right? How I like to describe it. If there's zeroed out orders above this level, usually something will go up there, take it all out, and then give the reaction because obviously it's touching sell orders only, so it sells. But then eventually it clears the way for this to go further. You guys know that sport where like the dudes are on ice and they throw this little like I don't even know what the thing is called. It's like a disc, and then the person starts sweeping in front of it, and eventually it gets to the circle where it needs to go. It's kind of like that. So this candle kind of swept in front of the ice, made it easier for the friction. And now this thing can start inching closer without getting shot down too aggressively because there's no orders in the way. It just kind of cleaned it up. So with that ideology in mind, right now, like this is attracted to zeroed out orders, but again, we're in between two. So whichever one goes first is probably the direction it's going to start running from. So since we're in the middle of both of them, like literally, if we take this freaking Fibonacci from the top and bottom, we're literally at the 50 point in between these two levels here. So market's going to be attracted to one or the other. We just don't know which one just yet because it has reached up here and now it's back in the middle. So if it keeps getting rejected, it's probably going to go for these first. Then that'll be the entry point. Then it'll get up there because these are all zeroed out orders. If it goes up first, it's going to hit zeroed out orders on the sell side. And then it'd probably be attracted to reaching those zeroed out orders here. That being said, alerts right here in the zeroed out orders and the top of these zeroed out orders would make a lot of sense because when that opportunity arises, we can decide, oh shit, it's in the zeroed out sell orders. Cool. Does it give us a sell reaction? We can take it down to the 30-minute one. If it goes down to the 30-minute one first, then it's in the buy orders. So if it gives us a good reaction, then we can take it to the sell orders. Right. So as a trader, we got to stay liquid because we can't just make our minds up and try to trade only that way because you'll probably be on the wrong side of the trade all day. You know what I mean? So don't be too fixated on where the market's going. Let it tell you what it's going to do by touching the places it needs to. So as we speak, we have alerts set. So I'm going to delete this again. And I'm going to show you how you could at least read where the market wants to go, right? So that's where the premium and discount thing starts to come into play. So market just opened. So I like to take the lowest point close to the market open and the highest point. Throw on that middle line, see if we can match it up with anything. Maybe we can extend it across. Does it hit the other data? Looks pretty good. Got rejected at the middle here once, twice, 3 times. I don't know if I can make this make sense, but a computer already knows what it's going to do because it's like predetermined. So when I see the current data mapping out with data that made no sense, like this stuff over here, like it just goes up, turns around, goes up again, turns around. So it's like, I wouldn't be able to understand that. But a computer that knows it wants to use this level later, it understands its intention. So if the data now also subscribes to what happened before, then it's probably the computer mapping out exactly what it was going to do in the first place. So you can see here, rejection, rejection, and then it goes, grabs something around 6 o'clock. That's not a coincidence. 6 o'clock goes right to where that rejection was, right? Grabs orders that were above that area, causes another rejection, touches something like an order block here. And then you can see 9 o'clock turns right around for the market open. Market open extends all the way to the top of this box. Therefore, this is giving us some kind of keys to look at algorithmically to say, okay, this is our Fibonacci. So now we'll use our Fibonacci levels. So you can see here, this thing fell, right? 945, we just experienced that it went down below the EMA. But what did it touch? We had no idea what it touched, but it touched 23 and an order block right here. That makes sense to me. Therefore, the reason we're going up right now is because it's just a retest and an order block. So we can continue to follow this ideology. So if we don't break the 50, then we should continue to go higher and higher until we get to that 150 area, which the 150 area is the zeroed out orders that we spoke of on the 30-minute and the 4-hour, right? So here's an order block for the 4-hour. Let's take that middle line off so we can have less lines. This is 4-hour order block. And then the 30-minute order block, right, where all those zeros were, it's right here. And let's see if this matches up with the 150 on the Fibonacci we have. Cool. It's like literally just right above it. So that means we can probably target the 150 as a rejection point, this area. So if we can get in buys closer to the 50 and let it hold, we'll eventually inch towards this area and then that'll be the trade. Take the profit. Right? Does that make sense? Or are there some steps in there that's like, oh, wait, that's too fast or sounds new? I haven't learned that before. I think this is just the same process we walk through most times.
Valid, bro. Valid.
Valid. Cool. Yeah. So,
Makes sense.
nice. So yeah, using the box helps you with direction, you know. So right now you can see it came out of the box. It was struggling to hold the 50 a few times. So it came back, used the order block in the 23. We're back above the 50 again. So we know if it goes out the bottom of the box, eventually needs to touch the top. It has touched the top. So now technically it's supposed to go out of the bottom, but it's back above the 50. So as long as it stays above this, then that means we can actually go out the top, touch, and then if we come back in, that's okay because there's a lot of zeroed out orders there, so it would make sense. That being said, 30 minutes, right? We spoke of the zeroed out orders down here inside of this order block. And would you look at that? There's a 50%, the negative 50, and zeroed out orders. So if we do go out the top of this and fall down, probably just going to come touch this thing, right? And if it does that, we'll probably see some kind of 1, 2, 3 action taking place. We'll get the drop, pop, drop, pop, you know, and eventually it'll come down maybe to an order block like this. And there's some extra levels we'd have to put on. And then we'll probably see another pop again. From those sell orders, the reaction should be huge drop, touch these orders, pop again, and then eventually 1, 2, 3, and then a correction. But that's really far-sighted because it's going to take a lot of time for that to happen. But at least we can plant the seed now so we can see how that looks in the future. So I'm going to take all this stuff off for now, leave just the boxes. I'm really fixated on this area here. Huh? Or chicken, whatever. So I'm gonna change some of these box colors, bro, because be messing with my eyeballs. The fridge is crazy. I think it's like the top shelf of the fridge is so close to the freezer. Oh, the bottom shit too? You can probably change this. Yeah, that's what I'm saying. Too close to the freezer, like the bottom of it, I guess. Yeah, that's me. I was gonna eat it that one day, but I was hyped. Yeah, I was hyped to eat it, but egg salad don't smell good sometimes. When I bought it, I was ready, but when I got home, yeah, it didn't smell too good. Okay. Yeah, I got you. I'll see you. You need 4? Okay. Let's see what these 1 minutes doing. See some actions. Maybe we can use the anchor profile right now in real time. So yeah, I can kind of see. Although the 1 minute's not always reliable because obviously it's a smaller time frame and sometimes bigger time frames takes, you know, authority over where the market's gonna go. But let's see. So it's currently in an order block right now. So you'll probably see these orders start changing. Ah, shit. Sorry. Yep. So here's the order block. Just changed up all the orders. Some zeroed out orders right here. A little below the order block at the structure. So if we can't go higher from this order block right now, it's probably going to come down, touch this structure area, then we can probably get a little bounce and try to save this EMA. If not, then we completely lose all of this area and we head straight down here. So it just touched the last of those zeroed out orders right now. So it should go up from here. And like I said, if it doesn't, then we'll check this area. And this is an order block, but check it out. No zeroed out orders in it. But there's one down here. Let's take a look at that one. It's got like zeroed out orders at the bottom of it. So there's basically no zeroed out orders on the smaller time frame right now. So if we do lose this 50 area, then we can easily slice through a lot of this garbage and get right down to the low. And I don't know if you guys remember on Monday, we talked about the 1, 2, 3 idea. So hypothetically speaking, 1, 2, 3 idea pushes, done its whole run. So usually if it's finished, it'll try to sweep whatever low the 1, 2, 3 had. So if we can't go back up, then it's going to push straight down through this 1, 2, 3 idea. Yep. And that's the order block too. So let's see what this EMA does. We might get one more push up, and then maybe we can decide to short the market. I was really hoping to hit those zeroed out orders, but they could be saving it for a rainy day. Like we said, it could go down to the 30-minute zeroed out orders first before actually going for those bigger ones. So that's a pretty far drop to get there. So we'll see. It all starts with little candles though, you know. All right, cool. So it just touched this order block here. We deleted those zeroed out orders. Let's let the market operate a little bit. In real time as well. We gotta wait for the candle to finish, but check it out, right? We got new order blocks here. And now there are a bunch of zeroed out orders. No buys. And this is on smaller time frame. So again, data could be skewed a little bit. Oh, check it out over here. You can see there's a lot of buy orders here, more buy orders than sell orders based off of the data. That being said, doesn't that mean we should be going up? Right? We shouldn't have more sells than buys. If we had more sells than buys, the market should be going down. So you can see here, like we're maintaining more buys than sells. So nice push. Again, there's a lot of zeroed out orders here. So every push is going to come with a pullback because it's like mind sweeping, right? So we push, right? We get maybe rejected a little bit, but it's just reacting to the orders it's currently touching. That's where structures start to come into play, right? So we know that we just got a bunch of buy orders here. There's a structure right here. So there's a good chance that we rush to that structure. There's zeroed out orders here. So we need to mind sweep it as much as possible. So we'll play in between structures. This is just to show you guys a faster version of what we're looking at when we're talking about the anchor profile and how the orders change, right? So it's a forever changing set of orders depending on how you're using it and how you're looking at it. So you can see in real time, it's very skewed. Right now, there's a lot of buy orders in this area. So technically, based off of this data, if we were subscribing only to order flow, everything under this area here should be buys. Anything here should be buys. Man, bro, can I get like a good color? We'll do that. Kind of bright, I guess. So good buy orders here. But there's a lot of sell orders up here. So that means every time we push into this area, we should eventually, if we can't fall, push higher into those zero orders. The zero orders can only push us back. So that means it needs to go back to the same area again. But eventually, after being touched too many times, maybe buyers could give up. So if you guys hear in YouTube videos, maybe or even on the news, they'll say like buyers are exhausted. So if this is the buying area, how many times can you buy here and expect to see your trade go to zero or maybe be negative, right? Maybe it's down a little bit more. Eventually you're exhausted of looking at it, so you just take out of your position to avoid more risk. So here comes the structure level we spoke of, but there's zeroed out orders again that they keep touching. You can see right here above the structure now is the next set of zeroed out orders. And the EMA is there. So maybe that's a good short position to go back to where the most buys were. Based off of the 1 minute, by the way. Again, you can't trust the 1 minute that crazy. Maybe for a short term trade, that's okay, but we're not about to have 4-hour moves based off of it. But it does start things. So zeroed out orders, right? It has no reason to go up if there was only zeros here, and there was zeros. So then that's why it's get pushed down. That's why it's having the reaction. But that doesn't mean that it needs to fall like all the way down, right? As long as buyers step in somewhere here, then it can still have a chance to go back up, reach more zeroed out orders. So that's why order flow is different, right? Because if you look up here, the buyers now gave up on this position. And then if you look here, sellers, they haven't even like put any sells into this area yet. So when we get down there, we'll see those numbers change. But we should see a lot of buyers stepping in from this area based off of order flow, right? You can see we dipped into this quote unquote discounted area. We turned around a few times from it now, but they're testing the buyers again. So if the buyers don't step in, push this thing up, then buyers would be exhausted, quote unquote, right? That's how they talk about it in commentary. So if you guys ever watched a trade room before, like I don't know, you seen Wolf of Wall Street, maybe they have a trade room, right? So you got a bunch of dudes in there, they're all at the phone back in the day, and they're just like taking trades. The trade room now is a little different. So you look at Wall Street floor, it's just a lot of computers, and everyone's just commentating on the price movement, thinking that it would influence people to step in at certain areas. So they'll be like, oh, buyers are here, they're fucking showing up. And then you feel like buyers are showing up. So you get in and guess what you do? You add to the buyers. So if they can increase the amount of buyers that happen, then they can get the move they want on the market. But if there's not enough influence that day, then they can't really do that much manipulation. So it just depends on volatility, right? And volume, how many people are trading, how many people are tuning in, right? Wall Street's got a lot of money, so they can move the market pretty nicely. And then if they can get you on their side as well, then manipulation's kind of crazy. So you can see there, buyers stepped in, right, as we spoke of, and they're trying to keep it afloat. This is the structure level they need to protect. They're keeping it, right? You can see they did dip in with a few candles, but we'll see how much of a dent that really makes to the bigger mission here. I hope this is making sense, right? If it doesn't, please interrupt me, ask some questions or something, but I think it's fairly straightforward. Okay, so again, above the structure is the EMA. Well, the EMA is under the structure now because of the way the candles closed prior. But the zeroed out orders are above this structure. So in theory, we would need to touch above that structure in order to get shot down. I should also mention that if we're mine sweeping, we don't care to get shot down. If it goes to the zeroed out orders, all it wants to do is just sweep the area, right? So imagine you see a candle rockets through all of these orders, and then big wick comes all the way down here and closes. Now there's no zeroed out orders up there. So we're chilling and we can eventually inch our way through that area without having to worry about getting blasted down. Right. So there's a lot of different tactics and ways to approach war, but I like putting it in the aspect of war because it kind of shows, the tactics of money and how it's maneuvering through this battlefield we know as a stock market. So you see this big wick here? That could be a sweep for those zeroed out orders that were above this level. So now if it swept it, there's no more quote unquote above, which means if we can hold the EMA, maybe we can get the EMA to come lower while holding this buyer's area, get on top of the EMA, and then push higher into those zeros and have more things supporting the buyers. And again, this is all based off of order flow. We're not using anything else that we, learn about, like the premium and discount boxes or order blocks and stuff. So if you can understand price flow like this, then you can just use a skill in addition to what you already know. And that's what makes market mastery. That's where my accuracy comes from. So me being able to see the operation in real time and then know the areas of interest that, they would potentially go to, I'm able to provide a lot of accuracy for myself because I know that, oh, there's zeroed out orders here. So if they can't handle this area, it needs to go there, you know? And these tactics I've learned a lot from just watching, literally doing what we're doing right now. I can see it. Look, they're doing exactly what I was talking about. Push up, sweep, push up, sweep some more, right? We're just inching, we're sweeping. If we're sweeping, then that means there's something up there that they want. What is it? Well, we know about order block, don't we? There's an order block right here. There's a good chance that we can sweep until we get to that order block if they want the market to go down. So in order to exhaust the buyers, we need to enter this area multiple times. So if we can use this order block on the sell side and get it back down here, then maybe the buyers don't have enough juice this next time to push it any higher because this is the wall that's in the way at the moment. So look at all this sweeping going on. I don't know how many analogies I can put this into, but also it's like it just reminds me of Dragon Ball Z, bro. You got the two dudes, right, shooting a beam at each other, and whoever's got the more powerful one is probably going to be the winner. So right now you can see how much sell orders are trying to push down, but you can also see how much of the buy orders come in, but they only push down and on the market and buy up the market at certain areas. So this is the key takeaway that I need you to keep for yourself. This area is where we're seeing most of the buying action. So this area is where we're seeing most of the selling action. So have you ever looked at the market and was like, fuck, like, I don't know what the hell's going on right now. Like, where is this? Where is that? You might be in between the war. So you're playing in the gray area, like literally. So this is the gray area. You don't know what to do or what not to do in the gray area, right? So you need to participate in the areas where participants are, and that is the sellers or the buyers. So if you're in here, like, of course it's going to be awkward and weird and it's not going to work because there's no participants there. It's only here and here. So sellers come in here, buyers are coming in here. One of them has to win, which means one of them is going to get deleted and they're going to have to hold down the fort somewhere else. Yeah, no man's land. Exactly. That gray area is no man's land. So if you're trying to participate in the war in no man's land, then expect to fucking starve. You really aren't going to find many enemies. So at least in trading terms, like there's no buyers for you and there's no sellers. So you're going to get played with a lot. So you need to make sure that your trades are placed where the action is. So that way you can at least have a fighting chance, with some backing, right? If you're going to participate with the buyers, then you need to buy where they buy. Okay, so I'm gonna get rid of this. I think we got that visual representation now. And you can see how it starts off strong, then the battle takes on for too long, candles start getting small, and then the computer steps in and gives you one of those rocket candles that just fucking shoots up or shoots down and helps you with direction. All right, and it goes battle for battle too. You notice how we pushed into the discounted area, and then we actually won that war a little bit, got an advancement, but we made it too far into the enemy's base. They clapped back at us pretty nicely. Now they're pushing with their advancement, right? And now you can see where we're picking up more interest. So some buyers stepped in here trying to keep this structure level. But if they end up giving up, then we might be able to get pushed back more into those sell areas, or sorry, the buyer area. Hey, nice rejections. So, oh, yeah, nice rejections. You can see the structure level here. Still trying to hold that base down. They buy orders. If we pay attention to these orders over here, look at the sell orders in comparison to the buys. All right, up here, not a lot of buyers, really big sell numbers. Down here, kind of neck and neck right now. I think there's a lot more sell orders in these areas, but the buyers are currently stepping in, but there's still not more than sells. You can see right now, look, sells 1.6K versus 1.1, 1.3K versus 1.1, 1.5 versus 800, right? So there's way more sellers than buyers showing up right now. So this pop, quote unquote, is algorithmic, right? It's not real. So the algorithm now is starting to use its, I guess let's call it powers, right? It's trying to use its powers to get it to an area of interest. So the computer can only move it through these parameters, which is this structure and this structure. So the computer is going to continue to push up until it fishes for something. Someone's got to put in a big order, you know, and then when it does, it'll influence the move, and then the algorithm will help it into that direction. And that's why you get really big candles. So I like to call it consolidation into impulse, right? So imagine, let's talk about psychology, right? Human psychology. Oftentimes you'll watch a movie of the guy in a straight jacket, right? Dude gets put in there because he's got a little bit of mental issues. But if you put a man in a room with literally nothing and he's constrained, it's kind of like consolidation. He can't move much. So eventually, when he sees an opportunity, he's going to make the most impulsive decision that he can because he knows no better. You know, he just doesn't want to be here anymore. So he fucking blasts off. That's kind of the mind of the market as well. If it stays here for too long, it sees an opportunity, then it's going to try to take it and run with it. So consolidation into impulse. So a lot of these markets are the same way. It's the guy in the straight jacket right now because maybe the guy's in buys and it keeps testing him. It keeps going down. So he's like, dude, I'm gonna just get out. He gets out. That becomes a sell order because he needs to sell his position. So then it's a selling impulse because people start getting exhausted, and then people move in tandem, right? If I sell, market goes down a little bit, then the next guy's like, fuck, maybe I should sell too. Now everyone's selling. Now we get really big sell-offs. Right? That's all market psychology during market hours. That's why it's very tricky during market hours. But in the after hours, there's way less people, so it moves a lot better for us. Right? So I hope that makes sense, and I hope like this is driving the fact of why we trade the after hours more, why I enjoy it personally, why I moved to Asia, right, to make the market a little bit easier for myself. It's not entirely impossible to trade during market hours, but it's just more manipulated, so you need a little bit more skill, patience, and psychology. You're welcome back. Not really, just been chatting.
Yeah. Praying on your downfall, just like
Not praying on your downfall or nothing but good. The Wi-Fi.
she
Uh,
repeated what I said.
I was like, no.
I'm teaching some good trash right now. Yeah. Oh no, not currently. I will.
Oh.
Yeah, we're watching the orders live watching them come in and fight each other. You bought pancakes? That's crazy, bro. Send people to go get groceries and come back with snacks.
What kind of movie? When we eat,
Oh yeah.
you know the.
Operation PBJ.
Yeah, Operation PBJ, Mission PBJ. Yeah,
Got you.
so we're gonna watch it while we.
Sure. Check it out. Let's see if these buyers step in. Doesn't look like the buying numbers are changing at all. You can see over here. Unless this anchor isn't really working right now or something. Oh no, it is. They're just changing very lightly. So again, algorithm's looking for stuff. It's looking to start a fight. It's poking at the levels right now. So that's the impulsive move, right? Tries to go in that direction. Seemed as if it couldn't, but does someone step in? Right? Do the sell orders start to overpower the buy orders? Can it move? Yeah, the algo is a huge instigator. Facts. Yeah, he's instigating right now. So if he can instigate this area and the sell orders start coming in, then cool. He started the fight he wanted. And now they can get out of this area. So you can see here, these sell orders are starting to overpower. And now these are finally changing too. So the instigation's kind of working right now. The buy orders are not coming in at all. You see that? These numbers are literally 700 still. So that's how you can trust it. Okay, so now we're in the order block, right? And we remember there was no zeroed out orders in this order block. So it's not really that much of a wall in the way, but it still could be an area of interest for buyers to want to step in. So you can see the instigation happen, the impulse, right? We dug a little deeper than the discounted area. And now here's that structure level that they wanted to protect again. So now can we get back above it? If we can't, then this definitely has to go lower. So again, pay attention to the orders here. You can see all the sell orders. They fell off the map. Now sell orders are way under the buys. So buyers are coming back in again. Can you guys see what I'm pointing at over here with the mouse? On the right are the buy orders. On the left is the sell orders. Those buy orders right here, let me put a little box on it. These right here have not changed really. You can't really see that box either, but with the fib scale, it's bouncing out to 23. Okay, yeah. Got you. Yeah, I was just trying to show you guys the real-time movement of order flow and price since the market was kind of consolidating a little bit, but after consolidation, we do get impulse. So where's this impulse going to go? That's when we start adding the technicals. So can we move on from watching this real time, or do you think we need to continue to let it do what it does and get more reaction from it? You can text in the chat too if you guys don't want to turn on your mics.
I don't know, man. I think it's really good information, like how you're really watching, like you as a trader, and like how you come up with all the different variables and use them to execute a trade. I really like it. I like understanding that.
All right, as long as it doesn't sound like some made up trash, you know what I'm saying? Because this is how it works.
That's for real.
All right, cool.
Listen, bro, wizardry is not fake, man. You're just a beast at this
Yeah,
shit.
take it. I appreciate it, bro. I'll take it. Yeah, I'll be talking to myself most of the time, so I'm just like, damn, bro, does this make sense, bro? If I heard me saying this, can I see that? All right, sounds good though. Appreciate the feedback. So we'll fuck with it. We'll keep it on for now. Because it's like on the screen too much, I don't like keeping it on there. So I'm gonna delete it for a second to do some chart magic, and then we'll turn it back on. Okay.
Is this you coming up with like or just running down a different picture for the chart?
Yeah, I like to take perspectives when things start shifting. So for example, the big shift that just happened was we were really good. We bought buys, right? We were in buys and we reached this high. But like it got shot down twice. So if it can't go up, it must go down, right? Therefore, on a smaller time frame, how we were watching the 1 minute, the buyers were really like trying to hold this area, but eventually it got sold off and then went right back to the same area of buys, right? So we know that if something wants to fall, it usually will. And if it doesn't, then it may create, the 1, 2, 3 idea for us. After the 1, 2, 3, can it get above some kind of level? If it can't, then it usually will get shorted from it and then delete that level. But there's so based off of market experience and during market hours, it doesn't just have to do it 3 times now. Now it can do this as many times as it wants. It can touch 4 times, 5 times. But at least looking at a bigger picture, it can give us some kind of visual of what the higher time frame wants to do, because sometimes the smaller time frame may be too one-sided, when in reality, higher time frame is aiming for something. Like for example, there's a 15-minute order block here, and it just reached a little bit more of that order block. Maybe that's why buyers were stepping in. Therefore, in the next 4 minutes, if we can close this order block, then we might be able to say, all right, cool. Order blocks are gone. There's not another one until like way down here. So that sell off could be a thing, and we can target a trade from here and watch it delete all of this area. And we also know the next zeroed out orders are down here on the 30-minute. So if we can get a sell order in, maybe they'll be very aggressive about it. And that's how you end up in those trades that make like 8, 9, 10K in a couple seconds. And then you just put your stop loss in a good spot and let it ride until it gets to where you need it to go. So yeah, 5-minute order block there, 15-minute order block. Where is it? Oh, same spot. So it's a 5 and a 15-minute order block, and it's been eating at it, right? You can see it pushed once, twice, 3 times. That's the mind sweep again, right? So it took out all the orders here, here, and here out of that order block. So now it should be easier to delete. But I guess we'll see in 4 minutes if it does it or not. And then you can see the 1, 2, 3 idea we were talking about. Here's the fourth touch of that same thing. So right now it's like a whose side are you on kind of trade, right? Because market hours are very manipulative. So it's hard to just be like, oh yeah, based off the data, we're supposed to go up, because orders are coming in as we speak. So things can change at a flip of a penny, you know?
Yeah.
Let's put this back on. Let's check it out. So no buy orders are coming in at all right now. So this could be the algorithm poking, because sell orders aren't even coming in either. You can see they're just not changing right now. So the volatility is really low. So that means no volume means it's algorithm. Algorithm, again, likes to instigate. So if it can't get the action to happen here, then it's just going to go to the next area of interest. Where's that action at, right? So that's why, as a retail trader, if you guys remember how I teach it in the course, like a retail person would look at this chart and they'd see like maybe a trend line here or something. And then they'd be like, oh yeah, so wait till it touches that trend line. What's happening and why that trend line exists is because of algorithm instigation, right? It's looking to instigate that area, couldn't do it. Looked again to do it, couldn't do it. And then eventually it's doing it in a descending style, right? It can't seem to get any higher. And then the only guys that are showing up are sellers. Therefore, it doesn't sell off too much, but every instigated area has sellers. So that's why the buys never really take off too crazy, because it's the algorithm just trying to get those sellers to do more and eventually give them the move they want, or it creates stop losses. So if I'm a seller and I got sells up here, and then maybe let me change the color of this. I'm going to make these a little darker. So if I'm a selling kind of guy, I sold the first instigation. comes back up. I got another sell and maybe another sell. My price target is somewhere, right? I want to get in somewhere. So maybe it's the low usually. So that low is where my take profit will be. What happens when I need to get out? If I need to get out of a sell order, I need to buy it back. Therefore, that becomes buys. But what also happens to the buyer who had bought right here? And he puts his stop loss here, right? So now when the algorithm targets this area, a war is created, and that puts us in the position that the algorithm wanted. So now the people will decide, does it wick and blast off, or does it completely delete the level and aim for zeroed out orders, which is right here. So where are these guys stop losses at? Usually above, the instigated areas. So if we do hit those zeroed out orders, we know their stop losses are here. So if we want to hunt them, we're more than likely going to bounce and try to blast into those areas. And there's order blocks all in here. So we'll end up cleaning it up at a later date. But yeah, this is how the market moves, bro. This is called order flow. If you want to study it, this is not something I invented. This is how it works. So you can go online. There's a lot of older guys who have done studies on this stuff, and they have books. There's a guy named Ray Dalio. He doesn't really study order flow. He understands more about like commodity shifts. And by commodity shifts, I mean like when tech is trash, most people want to buy materials, right? When the world's gonna end, what do people talk about? They're like, fucking save your bottle caps and get metal, build a bunker. Um, so when things like that happen, people put money in certain places, which causes the market to act a little weird. So he does studies on that. So I recommend maybe looking at him as an author. He talks a lot about credit as well. But order flow wise, there's a lot of different studies, like the Candlestick Bible. Um, Candlestick Bible talks about candles, but maybe there's an order flow Bible. Don't know, haven't read it, but um, I eventually would like to write a book on it because I have a lot of experience just watching the chart just like this for a few years. And I got a lot of analogies that I'd like to put together. But at least within this video, you can see, where things happen, how the algorithm performs along with volatility, right? And low settings of volume, all it can do is instigate. So that's what we've been experiencing right now. At one point, we did see them putting up a fight. We saw them come in for buys here, fucking blasted it off real quick. But again, you exhaust the buyer, right? So you can tell the buyer got exhausted. Maybe there's a better discounted point somewhere. And check it out, right? We spoke of sellers wanting their price target to be where? This red line. And it comes down, touches it perfectly, right? That would be a quote unquote take profit, algorithmically speaking. So something I would love to stress as well, without a mentor in trading, most times you'll see people with lines on their chart, and those lines are created by you. So how could you trust it if you put it there, right? But with you guys understanding how to put the lines down, our lines hit, bro. They like actually get touched, and when they get touched, like they actually cause a different movement. So you can trust what you're putting on your chart. Just because you made it doesn't mean it shouldn't have as much value or confidence because I didn't put it there. We're all trading the same strategy. So those lines are put there for a reason based off of what we understand. So you need to use the lines you're putting there. If you're not using them, then what are you putting on the chart for? So for me personally, you can see me all the time in the Discord, like, hey, fucking 17,690. Yeah, I'm interested. And then it'll go down, it'll touch it, it'll put me in and blast off, and then I make some bands, and I'm like, dude, accuracy, right? But it's there for a reason. It's there because the algorithm is telling us, hey, this is that, this is that, this is how it works. So these reaction points are important. So if you don't understand them, I think that is a really good place to start focusing. Okay, so we can see the touch of quote unquote where a take profit would be had I been a seller here, here, and here, like a retail trader. So it gave them that. But usually retail traders are greedy and they want to see it like blast through it. So oftentimes they will touch and then try to scare them off. So now stop loss chasing should start existing, or consolidation, meaning this entire area here is technically fair game for the market. Why do you say that? Well, it's fair game because the trend line here retail traders use. So liquidating that trend line could cause a guy who took sells in these positions to get out of their position. And again, algorithms looking to instigate. So it's trying to fish for orders to start coming in. And as you can see, we came down here, we got no real buys or sell orders, not much interest. But you'll see eventually when we start to, now that this picture has showed itself, this has touched where it needed to touch based off of retail. So if you didn't get out, you're going to cause a commotion when the algorithm takes it back to where you got in, because now you're like, fuck, I need to get out. So you're going to see a lot more buy orders there or a lot more sell orders there because that's an area of interest, right? That's the next quote unquote high that we like to cause. But the reason it's the next high is because it's also where people recognize, where they should put their stops or their take profits. That's why those areas get the most action. So again, just watching the price action. There's really not much volume right now. So I don't want you guys to think like there's some amazing trade to be taken at this very moment. I do believe maybe later in the afternoon we'll probably get something crazy. But for now, the algorithm obviously seems to be trying to figure something out right now. You can see there's no real orders coming in. If we're subscribing to the idea that this is accurate over here, there's no real orders coming in. Every time this thing moves, check it out. Maybe cells are coming in like by the point twos, right? It's not changing by the thousands. Therefore, it's not a lot of volume. That being said, that's when the market starts to do more consolidation type and fishing for stop losses type of movement. So it's not recommended to trade during that unless you're trying to trade that psychology. But eventually that psychology ends because people do come back and they do start, trading for real. So if you were trading that psychology through all of this, we would have made a lot of money. We talked about, buying here and fucking sellers are there. And then we could have just ping pong that entire fiasco the whole time and made a lot of money. But eventually someone's going to step in and then you're in a trade and they'll fucking clean you up real quick with one nice candle. So you need to choose your battles wisely. When it starts to get overextended, expect the impulse. Okay. So after a certain point, you can't continue to do that. That's why it's not a strategy that we actually trade. But if you can understand that ideology, then feel free to trade that. But understand the risk involved. You don't know when it's going to end and when someone will step in. So does this pancake taste like it smells? Smell weird. Why it smell like that? Well, I could smell it because it's in the vicinity of me. I can smell it.
Say truth.
It's a Canadian pancake. Yeah, it smells Canadian. Smell a little Drake to me. Me? Nah, no. We was going crazy over here. We was going ham type. Why? Huh? No, we was going ham learning. Yeah. You can watch the video tomorrow. You know what I'm saying? And while you watch it, you can cut it up and find the good stuff and make it into a video, you know. Mm-hmm. Speed up the gibberish. Mm. Got family. Y'all got some questions running through the brain? I know we just been kind of sitting here, watching this stuff and breaking it down. So I hope that was insightful. But we're just gonna keep rinsing and repeating the same thing because obviously the market has no volume, so we can't really see the orders fluctuate that much. So I think we got the point at least of what algorithm and what orders do look like when it comes down to reactions, impulse, and consolidation. Um, but obviously this is something you would have to like rinse and repeat for yourself and practice more, so that way you can do it for yourself. But at least if you can understand the commentary, then just know that eventually it will be tangible when you start to do this for yourself and practice it. Um, but yeah, if you guys got questions about this stuff, we can run it. But for now, I really don't think there's a trade opportunity on the table for us until we get to the levels of interest we spoke of earlier. So I personally would like to see it going down to the 30-minute. And you might ask, like, so why don't you just get in sales right now if you think it's going to get down there? I don't know if it's going to get down there or not. You know, there's no volume. So the moment someone steps in, it can change the whole picture. But I know that this is an area of interest that I would like to be involved in. Otherwise, maybe a picture can be created for us later, and then we can target those highs. But for now, um, I don't want to put money on a whim. You know, I would like to see something. So cool. Well, if we ain't got no questions, then get back to my day so I can make this food and then hit the sheets. Go practice that same commentary. Oh yeah, definitely, bro. I think it'll add a lot of value to the way you approach the markets. Appreciate that knowledge. Yes, there. A lot of the moves have been happening in the after hours, so apologize for these live trades to not have trades, but I can't control when the market gives us opportunity. You know what I mean? So there will be a day where it's gonna look fire and we can take that trade, but at least for right now, let's accumulate some of this new profound knowledge that we can add on to what we all understand, right? So I got a bunch of videos coming out that is explaining a lot of these things in more detail. Now that you guys, I'd like to consider most of you advanced because you've been here for a while and accumulated enough trades to understand, you know, what manipulation looks like, what doesn't. So I think it's time that we can upgrade from, you know, the previous videos that you've had, even though they still serve, but I think these new ones will serve you better. So I'm looking forward to it. So May 7th is when I'll start dishing them out, and hopefully we can use these Zooms to get ahead of the game. So appreciate y'all tuning in and everything. So since we don't have any questions or nothing, then we'll just wait for the Zoom tomorrow.
Sure, bro. Stay safe out there, G.
Appreciate you. All right, family. I'll see y'all. Peace.